Welcome to the Note Nuggets podcast, where you can learn how to become the bank, build wealth, and accumulate streams of income perfect for your savings or IRAs. You'll hear from industry experts, seasoned veterans, and everyday investors. Our goal is to teach you how to invest in notes, one nugget of knowledge at a time. Here's your host, Kevin Galang.
Welcome to another episode of the Note Nuggets podcast, where you learn how to turn other people's debt into income for your savings or IRA. Speaking of your IRA, let's talk more about IRAs. For those of you who might be unfamiliar with the acronym IRA, it stands for Individual Retirement Account. This is an account you can use to build wealth for retirement. And you can use it in conjunction with a 401k or a thrift savings plan if you work for the government. Before diving into the wonderful world of real estate investing and mortgage notes, when someone would say, hey, let's talk about your IRA, all I ever thought of was, okay, does it need to be Roth or traditional? And I would always ask, what fund or stock should I be buying? But we're not talking about that IRA, not the ones that you can open with the Schwab or Fidelity, not the ones where all you can invest in are stocks, funds, and bonds. The IRA we're talking about allows you to invest in anything except life insurance policies or collectibles. Unfortunately, that means you can't collect or trade Pokemon cards to grow your retirement. But in all seriousness, you can invest in what the government calls quote unquote alternative investments. And these are things like real estate and, as you may guess, promissory notes. Also, if you have a Roth self-directed IRA, you can grow that bad boy as large as you want, and then when you withdraw it, it will be tax-free. Because the government deems real estate and notes as quote-unquote alternative investments, there's a buttload of paperwork associated with that. I don't know about you, but I am not a fan of mounds of paperwork, which is where our guest and his team and organization come in. This week's Note Nugget is dedicated to the role of self-directed IRA custodians. Before we learn about our guest, don't forget to leave the Note Nuggets podcast a review on Apple Podcasts. While I'd love a 5-star review, any feedback helps grow the show. I made it super duper simple. Head over to notenuggets.com/review for step-by-step instructions on how to leave an Apple Podcast review. Now, let's learn about our guest. Scott Maurer is the Director of Business Development for Advanta IRA and has worked with Advanta IRA since 2006. He's a frequent speaker and lecturer on the topic of self-directed IRAs. Advanta IRA specializes in administering self-directed IRA and retirement accounts, allowing individuals to invest their retirement funds into assets other than stocks, bonds, and mutual funds. Advanta does not sell investments, but rather provides a platform for individuals who identify unique alternative investments like real estate and private startup companies. All right, thank you for that clarification, Scott. And so what is Advanta's role in all of this? I know you said you handle the administration side of things. What does that actually look like?
Right. So, a lot of people associate an IRA or retirement account with a financial advisor or a brokerage firm that again is offering you products. They're possibly giving you advice and steering you into particular products that they sell based on a risk portfolio. And that's actually not something we do at all at Advanta. We are a record keeper and administrator. So we help people who identify a unique asset that they want to purchase that a brokerage firm typically is unwilling to hold or unable to hold. That's their business decision. Not to hold these assets, but we don't give advice. So we're not. If someone comes to us and says, "I want to use my IRA to buy the house down the street that's available now that I could buy and rent out," or my friend's startup company, who's my friend's starting up a new business and he needs some capital to get it off the ground, I'd like to invest in that. Our role is to simply make sure those investments get properly titled, but not to do any of the due diligence or advisory roles for those particular investments. So what we do at Advanta is we will hold that asset, similar to how a brokerage firm will hold your mutual funds and stocks and other holdings. We will hold that piece of real estate. We will hold that stock in the private company and then do the administration that goes along with that. So if you own rental property, either in or out of an IRA, there's rental income that must come in back to the owner. In this case, with us, it's coming back to your IRA. So we're receiving the rents, depositing them to your account. If there's any expenses associated with that property, we are paying those expenses out of your IRA. So that's a lot that has to go into the administration of the account, is receiving income back into the IRA from your investment, paying any expenses out, as well as doing IRS reporting as well. Each year we are required to report to the IRS the annual value of your IRA account. That's something we take care of, and any other IRS reporting that's needed on an ongoing basis.
Okay, so you're really taking care of all the back end, all the paperwork, the stuff that nobody really wants to do, and that's where Advanta comes in.
Correct, and that's a reason why the big difference between us and someone like a Schwab or a Fidelity or a brokerage firm. There is a lot of paperwork that goes into this particular investment. When you're buying a piece of real estate, there's a real estate contract, and there are closing documents, and then after you've closed, there's leases and bills that have to be paid, and that's what we are willing to do, is that administration, signing documents, receiving funds into the account, et cetera. And typically that's the reason why the brokerage firms don't want to hold the asset. It's more labor intensive. They make their money off selling you their investments and their stocks and their mutual funds that they offer. That's where they make their money. That's why they're not interested in offering this type of product, a truly self-directed IRA, I should say, to their investors.
All right, now you know the true value of a self-directed IRA custodian. They save us a tremendous amount of time, but they help make sure that we are in line with the IRS's policies. You don't want to mess around with that. Of course, you can invest in real estate, you can invest in notes, and there are many, many more things you can invest in. To bounce ideas off of the experts, head over to notenuggets.com/custodians to get full access to my interview with Scott, as well as his contact information. Thank you.
Thank you for tuning in to this week's episode of the Note Nuggets podcast. Be sure to subscribe to the show to get access to additional weekly value nuggets and get notified with episode updates. To subscribe, all you have to do is head over to subscribe.notenuggets.com. If you have any questions about this episode or note investing, book a time on Kevin's calendar at contact.notenuggets.com. We'll see you next week with another note nugget to add to your tool belt.